It was more of buying the US oil last week as we were part of a bullish momentum that led to the first time price action will be breaking out of that $82 mark level for the first time in 5 months. And with the breakout we have now, is this going to be turning out to be a false breakout or a true one that will lead into more buying opportunities above the $82 mark? On this note, I welcome you all to yet another promising session as we are going to be taking a simple but technical dissection of the current market structure. And before we go into the details of what our expectations are for this week, I want us to quickly have a review of the key moments that we had during the course of last week. And talking about last week's trading session, my first commentary was published, I think about 8 a.m. UTC, as we saw price action trapped within the $81 mark and the $80.45 level to give us a clue that there is a level of indecision at that point. And you all know what we look out for whenever we have this kind of simple setup. We want to see price action either break out of that resistant line or break down of the support line for a trading opportunity. And in fact, the latter was what happened here as we had our first sell position for the week after the breakdown of the $80.45 level. Though price action was quick to come back into our entry point, though we were able to secure some positions, so we were taken out of that position at a worst case scenario of break even. Then we still had more opportunity to sell again as we rode the move all the way to the downside. So later on Tuesday, we begin to see a chopper situation where price action was not giving a clear signal of where the momentum want to be going. And as you can see here, I shared an update on the 15 minutes time frame where we were looking out for the breakdown of the $80.45 level to join a sell momentum to the downside, and we were part of this move. And as soon as price got into that beautiful demand zone, we identified between the $80 and the $79.50 level, we begin to see buy pressure, which triggered our buy stop order. And this was discussed in detail during our morning live session on Tuesday, and we were lucky enough to be part of this position as we continue to ride the move to the upside, hereby leading to the first time price action will be breaking out of that $82 mark. And this continued, as you can see here, until it got into that $83.37 level where we had our first TP target hit for the US oil with a minimum of 130 pips in profit. And we saw some choppy situations happen there, which led to some selling pressure during the later part of the week, which we're actually part of. And the week closed in a situation where we begin to see some buy pressure resume in this market. If you do want to have a personal review of this, I will be dropping the link to this commentary in the detail box of this current video. And for those who are watching this video from my YouTube channel, you will be seeing the link displayed at the top right hand side of your screen. So with that being said here, let's dive back into the current market structure. And as you can see what we have here, the structure we have here still remains the same, and we shall continue to use this to guide our trading activity for the week. Now, the first thing I would like to state here, I would like us to see here, is the fact that price action has been bearish since the second half of last year, and this is more evident after connecting the series of lower highs, which is giving us this bearish trend line that has been supporting that bearish momentum since the month of July last year. Now, with the situation of things right now, you will see that since the month of November, price was trapped within a flat channel between the $82 mark and the $72 area. And what we saw last week was quite interesting, as we saw price action break out of that $82 mark for the first time in 5 months. And at this point in time, you would agree with me that we are at a critical point in this market. As you can see, the breakout of that $82 level also shares a beautiful confluence with the bearish trend line that has been supporting that bearish momentum since the second half of last year. Now, the next question we are going to be asking ourselves at this juncture is that the breakout we witnessed here during the course of last week, is it a true breakout or a false one? So these are things that we are going to be looking at on a much more lower time frame as we take a deeper look into what is happening above the $82 mark. So going into the new week at this point, our center of focus will be around the $82 area. As you can see here, we had a little breakout of that structure. Price action came back to do some retest of structure. As you can see, we have been citing some buy pressure resuming around that area on Friday, so we might likely see a trend continuation to the upside to finally break out of the trend line significantly to inside another wave of bullish momentum. However, if price action drops back below that level, then we might likely be seeing a situation where price action will be respecting that bearish trend line one more time. So don't let us jump into conclusion right now. Let's scale down into the lower time frame, and on the 4 hours time frame, I was able to identify a simple setup that I think that we can use to guide our trading activity for this week. And look at what we have here on the 4 hours time frame. So as you can see, in the last couple of weeks now, price action has been trapped within a range between the $83.40 level, which happens to be our resistance line as we get prepared for the new week, and then we have a support line at the $79.50 level, which happened to be an area which has been holding buy pressure for some time before the breakout of that $81.50 level happened during the course of last week. Now, with the breakout of the $81.50 level, breaking out that previous resistance line, we saw a situation here where price action came back to retest the structure, which is a beautiful sign that we might be in for another wave of bullish momentum. So going into the new week right now, I already have a key level that I will be using to guide my trading activity, and that is the $81.50 level. As you can see, we have a breakout of structure. We had a retest of structure, which was more or less characterized with some buying pressure coming out from that level. So what I'm going to be doing this week is the $81 level will be our yardstick for trading activity. As long as price action remains above that $81.50 level, we continue to look out for more buying opportunity. But if a breakdown of that structure happens, then we might be getting ready or thinking about selling if the continued selling pressure persists below the structure, hereby leading to the further breakdown of that support line at the $79.50 level to further give us a confidence to join a sell-off in this market. So this is what we shall be looking at going into the new week. So I'm of the opinion that price action will continue to be bullish here, and I'm waiting for a breakout retest of that $83.40 level to incite another wave of bullish momentum for the new week. I will be pausing the video at this point right now, and be rest assured that I will be with you right in the comment section on my TradingView platform to give you an update after monitoring how participants in this market will be reacting to this current structure during the early hours of the new week. I hope this video has been of immense help in making your personal decision on the US oil commodity for this week, and if it did, kindly support this project by clicking the like button. You might also want to follow me on my TradingView platform at Dark Sherry, spelled DARC SHERRY, so that you can be part of the daily commentaries I normally share in the comment section of all of my videos. Thank you for watching this video, and I look forward to seeing you right in the comment section on Monday as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.